Investors around the world are glued to their screens as they consider Tesla's mysterious future in a challenging environment. In this video, we set out on a journey to analyze the complexities of Tesla's profitability and look into the crystal ball to imagine the value of 100 Tesla shares in just 7 years. Fasten your seatbelts and get ready for an exciting journey where the horizon shines with the promise of substantial wealth awaiting Tesla investors. Before we go any further, make sure to hit the like button and subscribe to Tesla Stock News for more updates. With that said, let's get this video rolling as we enter this year. Our position on Tesla is unquestionably bullish. In fact, it was our top pick and the pick of the majority of experts who predicted a strong recovery after a relatively lackluster performance in the year prior. To our delight, this bullish outlook has come to pass. Equity analyst Garrett Nelson has some thoughts. While there is still cause for optimism, it is important to recognize that the lion's share of the stock's upward trajectory may have already materialized this year. A few weeks ago, we made a significant change to our rating, moving from a strong buy to a buy. This change was primarily prompted by valuation concerns and was greatly influenced by Tesla's stock price, which has more than doubled year to date. Our analysis is cornerstone. Our current price target is based on an evaluation metric of 42.5 times our projected earnings per share for 2025, which results in a calculated price target of 310. However, the real mystery that keeps analysts and investors captivated is the uncertain future of Tesla, despite its remarkable record in the electric vehicle market. Although Titan faces a complex web of obstacles in the future, these obstacles do not overshadow the fact that Tesla is positioned for a very profitable future. Let's now welcome our honored guest, Dan Ives of Wedbush Securities, a renowned individual whose insights into the Tesla space have repeatedly proven to be accurate. Dan has always been justified in his excitement regarding Tesla. Our film begins with an in-depth analysis of Tesla's most recent delivery numbers, which have shocked the industry despite widespread predictions of a slowdown. The strategic pricing of Tesla. Its market presence has been strengthened by maneuvers, which have also cleared the path for strong expansion, especially in China. Dan provides a clear illustration of Tesla's invincible position in the electric vehicle market. Although the EV market suggests that rivals are essentially paying rent while Tesla reigns supreme, he poses a relevant question. Despite the remarkable increase in market capitalization and stock price, Tesla's yearly production stays at about 1.8 million units, the same level as it started the year before, raising serious doubts about whether this sharp increase is actually justified. Dan presents a compelling comparison between Tesla's development and the Amazon Web Services moment, which is a revolutionary force, reshaping the industry. He emphasizes important facets of Tesla's growth, like the revolutionary supercharger network, which has the potential to completely alter the landscape, as well as Tesla's advancements in battery artificial intelligence and technology are seen as revolutionary. In conclusion, Dan emphasizes that the market could not yet completely appreciate the significance of Tesla's AI capabilities, a feature that could function as a powerful catalyst for additional development. Tesla has changed from being just an electric car manufacturer to becoming a multifaceted business with a variety of revenue sources. Every aspect of Tesla's operations, including its revolutionary supercharger network, strong energy division, and cutting-edge artificial intelligence capabilities, merits independent assessment in order to arrive at a more accurate and thorough valuation. As the company's story progresses, wise investors should take into account not only the sum of its parts, but also the extraordinary potential that each part represents in the Tesla universe. The journey is far from over, and the road ahead holds the promise of remarkable wealth for those who dare to invest in this visionary company. Speaking of Tesla's journey, let's pause to consider the wild ride that investors have endured in recent years. The stock rose to all-time highs, hitting over 407 per share in late 2021, but in 2022, Tesla's worst year ever saw a sharp decline in value, losing nearly 70% of its value. The decline appeared unrelenting, with shares in a near free fall. Interestingly, one of the key events during this time was Elon Musk, the CEO of Tesla, acquiring Twitter in a historic $44 billion deal. This move sent shockwaves through the tech and automotive industries, leaving analysts and investors wondering about the implications in the Tesla world. The only thing that is constant is change, and the story keeps evolving, providing both opportunities and challenges for those who dare to invest in this fascinating journey. Let's now take a closer look at the factors that could affect the price of Tesla stock in the years to come, particularly examining the bullish and bearish scenarios and their possible effects on investors. The year 2023 has brought about a period of recovery for Tesla despite uncertain economic conditions. The company's stock price has experienced a remarkable surge, appreciating by nearly 150% since the year began, reaching an approximate value of $280 per share. Many investors are wondering whether this upward trajectory will continue and what lies ahead for Tesla and its shareholders. Strategic pricing reductions on its whole line of electric car models are one noteworthy event that has contributed to Tesla's recent success. This announcement increased investor confidence and brought new excitement to Tesla's shares. Traditional automakers like Ford and General Motors announced their plans to enable owners of their electric vehicles to use Tesla's vast charging network, which will soon give owners of Ford and GM electric vehicles the convenience of charging their EVs at numerous Tesla charging stations. This announcement provided another boost to Tesla's stock price. This move highlights Tesla's leadership in charging infrastructure and creates new revenue streams for the company. Speaking about Tesla's recent performance and valuation, well-known Wall Street analyst Dan Ives thinks the company is headed toward a valuation based on a sum-of-parts approach, which is a valuation methodology that analysts favor and involves evaluating the value of various business divisions or subsidiaries separately before combining them to determine an overall valuation and price target for the company's stock. This change in valuation perspective may lead to more favorable consensus forecasts for Tesla that take into account the variety of revenue streams and business segments that Tesla is actively involved in. Now, let's explore the intriguing question of what Tesla's stock might be worth by 2030. We will examine two possibilities in order to respond to this: the bear case and the bullish case. In the bear case scenario, where Tesla's stock hits $2,500 per share, a number of factors come into play. First and foremost, Tesla faces significant challenges navigating the intricate regulatory environment surrounding autonomous driving in order to gain widespread approval and navigating the nuances of safety standards and regulations in various regions. Furthermore, Tesla's production and delivery timetables may be negatively impacted by possible disruptions in the worldwide supply chain. Maintaining a steady supply of essential parts and supplies is essential to Tesla's business operations. The electric vehicle industry's competitive environment, the EV market, presents additional difficulties. While new competitors are joining the fight to keep its lead, traditional manufacturers are investing heavily in EV development. In the bear case, Tesla needs to maximize production capacity and scalability to meet the increasing demand for its vehicles while maintaining high-quality standards and customer satisfaction, which calls for streamlined production processes and efficient supply chain management. Let's now look at the base case scenario in which Tesla's stock reaches $8,000 per share. In this scenario, we make assumptions related to the launch of autonomous driving products and the expansion of Tesla's charging network in order to achieve regulatory clarity and approval for autonomous driving on a global scale. Above all, this entails working with governments and regulatory agencies to create safety standards and norms in addition to technical developments. The planned Cybertruck launch, a novel electric truck with distinctive characteristics and design, might revolutionize the Tesla industry. Fulfilling the significant demand for this cutting-edge car would showcase Tesla's manufacturing capacity and marketing expertise. In this case, Tesla's network of superchargers is expected to be crucial. Tesla might make a sizable profit if additional automakers decide to use its charging infrastructure. Tesla's recent readiness to provide competitors a license to use its charging technology suggests a change in strategy that might strengthen its place in the EV ecosystem. The successful installation of the Tesla Bot, a multi-purpose 5'8" robot built to carry out a variety of tasks, could be considered a technological triumph if the robots can manage dangerous and labor-intensive jobs in Tesla factories and beyond. They could also develop into highly sought-after products that greatly increase Tesla's revenue. Lastly, a number of catalysts need to be present in the most optimistic scenario, where Tesla's stock soars to $22,000 per share. In order to provide an autonomous ride-sharing service that could transform urban mobility and produce a sizable amount of recurring revenue for Tesla, the company's fleet of robot taxis would need to reach previously unheard-of levels of efficiency and cost-effectiveness. It is an impressive undertaking for Tesla to license fully autonomous driving technology globally. Obtaining regulatory certification for FSD globally calls for not only technical excellence but also strong lobbying and negotiating abilities. Tesla's dominance in autonomous driving technology would be cemented if it could accomplish this feat. In this scenario, extending Tesla's energy solutions such as solar panels and energy storage would increase revenue and help create a more sustainable future. Tesla's energy sector is another pillar of potential growth. Investors that care about the environment may be drawn to this diversity. And in conclusion, these scenarios provide intriguing insights into the possible future of Tesla and its stock price. However, it's important to recognize that a variety of factors, such as investor sentiment, geopolitical events, and economic conditions, influence stock market dynamics. Although these scenarios are predicated on reasonable assumptions, actual results may differ. The roadmap to turning $274 into potentially millions of dollars by 2030 with Tesla is there. Investors must do extensive research, evaluate their risk tolerance, and make well-informed decisions based on their outlook for the company's future. Tesla's journey is a remarkable story of innovation and disruption, and its continued success will depend on its ability to overcome obstacles, adapt to changing circumstances, and maintain its position as a leader in the electric vehicle and technology sectors. This electric ride will undoubtedly be thrilling. With Tesla intentionally lowering pricing, increasing deliveries, and even collaborating with other manufacturers for charging stations, the company's stock price has experienced remarkable increase in 2023, hitting about $280 per share. Solutions analysts think that in order to accurately assess Tesla's value, each component of its distinctive business model, which includes energy solutions, AI, autonomous driving technology, and more, should be evaluated separately. Now, it's time for your opinions. What do you personally think will happen to Tesla's stock in 2030? Do you think that the company's move into robotic, taxes, and energy solutions will change the game? Do you intend to buy Tesla stock or hang on to your current shares for the long haul? If you like this video and want to be informed about everything Tesla, don't forget to hit the like button, subscribe to Tesla Stock News, and ring the notification bell. We appreciate your time and hope to see you in our upcoming videos.